Hey everyone, it's Don Harkins with your Florida House team and your Florida Loan team. Happy Friday, January 28th. I'm reaching out with a quick market update. I want to talk about a couple things going on in the market. It's a little bit more of the same, but there are some differences starting to emerge. The first thing I want to talk about is something that's on everybody's mind right now, and that is interest rates. The average 30-year fixed interest rate, according to Freddie Mac, is up again this week to 3.56%. So as the 10-year U.S. Treasury yield rose and financial markets start to adjust to the Fed's announcement about how they're going to combat inflation with some monetary policy changes, those comments were pushing rates up, and the 10-year Treasury yields are pushing rates up higher. And so as a result, we're starting to see some home buyer demand start to slow down. There's some affordability issues. Buyers know it's a tough market. So it's a very modest slowdown. And we still have very, very, very tight inventory. But make no mistake about it, this year, interest rates will be a headwind on the housing market, despite the fact that there's still ultimately very low inventory. One thing that's worth looking at is the interest rate over the last 5 decades. I was a little bit surprised when I started looking back at the historical data. The average interest rate in the 1970s and in the 1990s, for those 2 decades, the average interest rate was in the 8% range. And in the 1980s, the average interest rate was 12.7%. So, big picture look, we are still looking at, in the 2010s, an average interest rate of 4.09%. We're sitting today at about 3.56 to 3.75%. That's what the index is showing across the nation for most borrowers. So there's still a real bargain opportunity for home buyers out there, even though if you look just in the last 6 months or 12 months, it might seem like there's been a lot of rate movement. When we're talking about rates, we're also talking about general affordability. And those decades, 2008 to 2013-14, when the market was really flooded with distressed properties, the home affordability index showed that home affordability was not surprisingly at an all-time high since the index had started. And we have seen the market come down and start to show signs of it returning to pre-2008, 2007 crash levels. So home ownership is getting more expensive. I'll post a picture of that index so you guys can take a look at it. So what we know is we have interest rates increasing, home prices increasing, home affordability is decreasing some. Mortgage lending standards are still remaining very high, which is a good thing. But one other thing to look at is, why is buyer demand so high? And something that's interesting is rents have been skyrocketing, 9%, 12%, 20% in some markets, year over year increase in rents. So despite the fact that it's becoming more expensive to purchase, it's also becoming exponentially more expensive to rent homes. So we don't expect to see buyer demand, especially for entry-level homes, to wane anytime soon. If you have any questions about the market, give me a shout at 321-377-0341 and have a great weekend.